It's extremely important to know disclosure requirements, and this is an area that's heavy on the CPA exam, and also that accountants really need to know and understand, that I think there's often something missing. And we tend to emphasize calculations, computing income, preparing a balance sheet, and things like this. And I think we underemphasize the importance of knowing the footnote disclosures and other disclosures that accountants need to prepare. Very important piece of this is what we call MD&A, Management Discussion and Analysis. In your management discussion analysis is manager's own description about the company's performance during the previous period. Managers are expected to explain the financial condition, the results of operations, and various other factors about their company. In other words, this should be a written narrative explaining what's going on. I'll give you an example of one in a moment. Items required are liquidity, capital resources, results of operations, off-balance sheet arrangements, including a tabular disclosure of contractual obligations. I'll show you that in a minute. And there's also what's called pro forma disclosures. This is not necessarily in a 10K. Sometimes it's just in a press release, but lately these things have been getting into the 10K also. And this would be what if presentations saying what if happened. So what companies will often do is they'll disclose to you net income, and they'll disclose something called a non-GAAP income. Another similar term is EBITDA, earnings before interest, taxes, depreciation, and amortization. So companies may disclose these numbers, but they're not GAAP. And they need, if they disclose them, they need to explain how these numbers are calculated, because it's not GAAP. And they also need to explain, they need to reconcile these numbers to GAAP net income. There's an interesting thing I'll tell you. It's a piece of accounting trivia. FASB never defined operating income. And so it's arguable that operating income is actually not GAAP. And when companies report operating income, they should explain how it's calculated and reconcile it to net income also, which they kind of do in the income statement, so they get around that point. This is a 10Q for Starbucks Corporation. It's not a 10K, it's a 10Q, but it has a lot of the same things that you should be aware of. Item 1 here would be financial statements, which are condensed. Item 2 would be MD&A. Item 3, what's called quantitative and qualitative disclosure about market risk. Item 4, controls and procedures. So let's see what everything looks like, and then signatures. So here's the financial statements, which we've seen before. Here's the notes to the financial statements. And here's management's discussion and analysis. So what management will do here is they'll tell you all about the company. Revenue grew 11% to $6.3 billion, etc., etc. All about their latest acquisition, financial outlook for the year, comparable store sales. This is really a summary of everything that the company has done over the last quarter. Here's China, Asia, Pacific, and their results, what they call EMEA, which is Europe, Middle East, and Asia, I believe, and Africa. Starbucks in Africa. Here's other segment disclosures, but this is MD&A, and they're not really segments per se. And here, yeah, A must be EMEA, must be Europe, Middle East, Africa. Here's a list of the number of stores and various other relevant information. And that contractual obligations piece, they don't have a chart here of contractual obligations, but it would be reported over here if they did. A little bit about recent accounting pronouncements that are relevant, other information, and then a signature by the Chief Financial Officer, and a certification by the President and the CEO, along with a similar certification by the Executive Vice President, which is now required by Sarbanes-Oxley. So that would be what you would find in a 10Q, and the requirements of a 10K, of course, are much higher. There's a lot more data in a 10K for investors to benefit from. Okay, that's chapter 14. Thank you for